Everyone, Melvin here. Welcome to my YouTube channel. On today's episode, we're going to talk about the QML. The QML. So, first, let's get into what QML stands for. The QML stands for Quasimodo Levels. Some people also decide to call it the Quasimodo pattern, but mostly when we're on the internet and we're on whatever platform it is that we like to get our trading information, we don't see QMP. We usually see QML. I've gotten a lot of questions like, bro, what does the QML mean? What does QML stand for? Can you do a video about QML? Okay, right here, there's a video about QMLs. So we've talked about them QML, Quasimodo levels. So literally, what we're going to do first is look at it from a visual representation, and then we look at it on the charts, how I trade them. So first, I'd like to mention that the QML is not mine to take credit for. That's why we gave credits to Quasimodo or whoever it is that came up with the QML trading pattern. But how I learned to trade it's a little different. So the traditional QML, we have price rise to the top, then price prints a low right here, then prints a high above the previous high that was right here, then price comes all the way down here to print like a lower low, then price comes to around the same height of this, looking like a traditional heads and shoulders, and then QML is complete. But yes, I say this is how I see it on the internet, but I do not trade a QML that way because in my opinion it always starts me out before the move actually plays out. So I'm going to teach you the QML like the way I know it. So for one, just know that this is how it's represented, and now I'm going to teach it the way I trade it. So let's delete this. So technically this is what a QML looks like to me. Lower low up to around this point, and then price moving to the downside. So this is typically a reversal or manipulation pattern, and now I'm going to explain why. So right here, we all know that there's liquidity at each high and each low point in the market. So let me grab my highlighter tool. So right here, there was liquidity right at this point in the market. And then what market does is market prints right above this high, faking everybody into thinking that, okay, structure has been broken and then we're going for the uptrend. So when market prints this low now, everybody's in a limbo because structure was broken to the upside. Why does market have to come and print what's the name below this low that it has created now? So yes, market would mostly do this on a higher time frame. This is going to be an engulfing candle. There's a set of traders that are about to hop in on the close of the engulfing candle just for price to move all the way up here, grab the orders right at this point, and then shift to the downside. So the whole psychology behind this is the QML is wiping buyers and sellers out of the market at the same time, so the big players can have their move. So right here, there was liquidity, market printed above it. There was liquidity, market printed below it. Market came to grab orders right from this point and then print to the downside. So yes, this is going to be your idea for a bearish QML. Let me just put this up here. Bearish QML. And for the bullish, it's literally going to be on the flip side of things. We would have a bullish QML. Let's do this right here. So for a bullish QML, all we're going to see is price print a high, now print a low, then now price prints a high above this high that price has just printed. Now price comes all the way here just to grab these orders and then shoot for the upside. So this is going to be a bullish QML. So again, same psychology behind this every single time. You're going to see the QML mostly on the lower time frames because they will build up to the big move being created on the higher time frame. Maybe the QML is going to create the imbalance area, for the retracement, and then price shooting into its direction. But the QML happens so fast that mostly if you see a QML in the higher time frame, it's going to be a swing move. These set up for the moves on the lower time frame. So I'm talking maybe the 15, the 5, and then the 1 minute time frame. The QML is going to be gold on those time frames. So right here, where you have your, let me have my highlighter, we have a high point right in this market. Price pushes all the way down here. So I'm gonna highlight. Price pushes all the way down here to wipe whoever was in this move, whoever was in a buy right here when they saw a high. So then now price also prints right above this, what's the name, above this high, and then moves all the way down, which most people are not expecting, because right at this point there would have been an engulfing candle and like other reasons to immediately buy, because maybe price broke resistance, people are expecting a break of retest, a break and retest, and then price has to come all the way down here close to the initial low that we formed, collect the orders, and then print above this. So that's the whole psychology behind the QML. So let's go look at this on the charts. Let's see. So one playing out nicely. So yes, right here we had our low. This is a bearish QML, by the way. We had our low, we had our lower low, and exactly the reason why I was saying that you should wait not for the two necks, like right here and right here, to be equal, because price has to trail into almost making that high point that it made right here before the sales can actually continue. So with me, how I actually get this whole QML area, how I identify the area I'm looking for my sales, or yeah, in this case my sales, is I can do it two ways. I could usually have a fair idea of the area I want by measuring with the Fibonacci, or identifying the supply and demand, in this case supply, identifying the supply candles in each supply zone. So that's going to be a little bit it's going to be another lengthy video, so we'll do that on the next one. So today we're going to be talking about how to use the Fibonacci to at least determine our supply area if we're in a bearish QML, and to determine our demand area if we're in a bullish QML. So all I just do is to draw the Fibonacci from the open, not the open, from where price began the sell, from high to low of the area that broke this low to form the lower low, heading into the QML. And I'm always looking for what works best for me. I'm always looking for somewhere between the 79 and the 84 area, but most likely I usually in the 79 level, because I prefer to have my stop losses between 20 and 30 pips. If I have more than a 30 pip stop loss, most likely I'm not doing something right and I don't take that trade. So let's say right here I'm going to draw my fib from start to end of this level, and I want it at my 79. That's where I take what's the name, a QML short. This mouse again. So okay, to the T. Right here we had price at the 79 level, and if I'm always targeting for my QMLs, I always target the next low point in the series for a bearish QML. So right here price from this low before riding into, so I wouldn't have taken the trade here, to be honest with you, at the 62. No, I'd always for my QMLs I like to take them at the, so I'd have missed this whole move, but yes, I'd have gotten a way better move if I were patient, and would have played out like right the way it did, because I like my QMLs at the 79, and then right here I target the low point here. So let's see how many around this would have given us. And yes, for your stop losses, I like to use either the 88.6 level on the fib, or for the QML I could place my stops right above the high point. If it's less than the 30 pips, I'm really okay. So targeting a low point in the market. So yeah, this 1 to 4 risk to reward setup, not the biggest of risk to rewards, but this is okay. On a 5-minute time frame, you would be in and out as quick as you want, and this trade would have played out. So this is a sell QML. Let's go ahead and look for a buy one. Okay, buy QML. But by the way, if you're watching this video and then you spot one, you are actually right. I'm just trying to look for an example that I see clearly, just to show everyone. Let's see, can I find one here? Research charts. Okay, right here there's another cell, so we can let's discuss the cells, then we go look for another buy. So right here, another cell QML, we had our low, we had a lower low, we had price retrace all the way into this level before price decided to shoot down. So that's it for QMLs. It's literally easy. Don't let anyone overcomplicate it for you. The supply or the demand candle, the seeing your low get formed, seeing your lower low get formed with an imbalance area, and then price retracing into the imbalance area, at least 79% of it. I like it at my 79. That's 78.6 or 79. I like to round it up. So let's see, right here, from open to close, from high to low. So okay, to the T. Excuse me for the clap, but kind of excited that it works. So from the 79, and then I target the most previous low. Right here there was another low also here. So let's see how that would look in risk to reward terms. Short position. So like I said, for my stop losses, I'd either use the 88.6 level on the fib, and I think I have that template right here. Oh, not sure. Sorry, fib. So yeah, if I were to use my SL, if I wanted something tight, because even this is a 11 pip stop loss, but I'd have had it just at my 88.6 level, and it's like a 4 pip stop loss, targeting this low. So yeah, there's a 1 to 7 risk to reward setup. If you ask me, this is very okay. Okay, perfect. We found a buy QML. So let me show that, and then we'll round it up with the video. I'd allow everyone to hop on your charts, look for QMLs, see if they work, and then, like I said, we'll try our best to keep up with this channel. We'll try our best to come up with what everyone wants to learn, what I personally feel is the good stuff. So let's discuss a bullish QML. So right here we had price print a high. We had now price close above this high, and in the process price printing a low. So all it is here is there were orders right above this point, liquidity right here. There was also liquidity here, and if you've not watched the liquidity video, it's in the series. I made a video about the main types of liquidity that we're going to have in the markets, and how markets and price would react to them. So right here there was this liquidity point acting as support, over here acting as resistance. So we just had price break this purported support, form this lower low. Over here now we have people into market structure, the way market structure is being depicted on the internet. A lower low got broken, we have switched price, and so over here it's tricking everybody into shorts, only for price to come back swipe this liquidity from the upside just to complete this QML pattern. So let's see if we are going to have our 79 level. Again, we draw from the highest to lowest point to the lowest point to the highest point in this case. So right here, when market was making this low, this was the lowest point, and here was our highest. By that I mean here and then here. So let's switch templates. Let's see. Okay, so over here we didn't have our 69, we didn't have our 79. Personally, I sometimes place limits, and this wouldn't have gotten me in, to be honest, but it's literally the same thing I'm showing you. Price has to retrace into at least where I like it is the 79 level for me, and then I take my trade. If you had decided maybe to draw your Fibonacci from this point, you would have had the 79, but I would have drawn it from this point, seeing that as the lowest. So yes, this wouldn't have put me in, but this is a very good example of a buy QML. Let's see if we can find another. So for today's case study, we're using GBP AUD, and GBP AUD, we're looking for buy QML. Okay, right here. So in this case, we saw a price print a high, then price printing this low, then price printing a higher high above this high, and then coming all the way down here into tricking people that price is selling, only to make a move for the upside. So literally that's what the QML entails. There's another one right here. Let's just use the fib to get this and see if we actually got this right. So to the highest point, so yeah, to the T, a 79. And then if you want to be very realistic in your targets, you target the most previous high. That's right here. You'd have got short. Let's just say your stops were beneath this, and then you had your target right here. That's a good 1:3. And if you also had your stops at the 88.6 level, that'd have been a good 1:9 risk to reward. You were risking just, I think, about 4 pips for 37. That's a very good risk to reward setup, if you ask me. So guys, that's it for the QML. Remember, the QML does not belong to me. It's a strategy, or it's a trade pattern that I learned, and with a little bit of twist of modification. Also did not come from me, but then I've taught you the best way that I know the QML. And excuse me there for a bit. Thank you very much for watching. Thank you very much for staying to the end of this video. I'll see you in the next. Don't forget to like, subscribe, and hit the notification button if you find these videos helpful.